Hello, Guillaume here, CEO at Optio, and today I'm going to show you how many of our clients have saved 10, 15, sometimes 20% of their Google ad spend uh, in exchange for a minimal number of conversions, and when reallocating that spend, have gone on to drive some very significant performance gains. It has to do with the range of click prices that Google charges you. The vast majority of accounts today use smart bidding. That's over 80% of accounts, according to the hundreds of thousands of Google Ads accounts that we have access to. And in Google Ads and the various tools out there, everyone tends to focus on this metric, average CPC. You'll see a $5 average CPC and think, $5, maybe that's a dollar higher than it was 2 years ago and whatnot, but that still seems in order. You may have heard the saying, averages lie, right? And in this case, what that might mean is that within that $5 average CPC, there's actually a whole range of click prices, right? Typically along a bell curve. So there's some much cheaper prices than $5 and some much more expensive prices than $5. I'm going to jump into Optio now and just illustrate this for you. So here we're inside of Account Manager. You can think of it as a lightweight alternative UI to the various ad platform UIs, right? It's compatible with Google, Microsoft, Meta, LinkedIn, and TikTok ads, bringing all of those into one place. There's a lot this can do, and I'm just going to cover a very specific use case. I want to zoom in here and focus on these three columns right here, right? Average CPC, high CPC, and low CPC. So you can see here in this example that while the average CPC is, close to $13, the range of click prices actually goes from 15 cents to, in this case, $84, right, over the last 30 days. So I can come in here and actually click to see some examples of individual click instances and how much they've cost, and kind of revealing that end of the bell curve. Before I continue, I just want to quickly address this belief that maybe expensive clicks aren't as much of a problem, because the more expensive the click, surely the more valuable the click, or the more likely it is to convert. And while there is a little bit of a correlation there, at the end of that bell curve, meaning the most expensive clicks typically very much aren't worth it, right? We've seen clicks that are much, much more expensive than the target CPA, sometimes much more expensive than even the lifetime value of acquiring a customer. We've seen click prices that go as high as $900, which is a month of rent in all sorts of places, right? These things can get really quite silly, so it's worth looking into. So earlier we did this very large scale data study with over 330,000 ad accounts with data scientist Austin Pena. And what we found is that the top 10% of click, the top 10% most expensive clicks, drive CPAs that are 134% higher. And that's just on average, right? There's a whole range there. But what we've seen is that there's a very clear correlation that basically CPCs rise at a much faster rate than an improving conversion rate. Okay, so we've looked in Account Manager and we've diagnosed that we have some unreasonably high CPCs hidden beneath the surface. So what now? The key is to validate that for your campaigns, the extent to which these click prices are worth it or not. And for that, we're going to look at Optio's new segments feature. Right, so we're here in segments and we're going to look at this CPC band section. So what I've got going on here is that I'm here in the campaign selection. I've removed brand campaigns and demand gen campaigns, and I'm focusing on generic search. So across these 16 campaigns in the last 90 days, what's happening here is that we are bucketing the performance data by click price bands, right? Or CPC bands, as we call them. So here's the data for the $0 to $4 band, right? That's 27,000 clicks. So about 25% of the cost, representing actually 72% of the conversions, right? So this is your most valuable segment, right? It's driving conversions at a CPA of that's 64% lower than average. And you can see that as the click prices and the click bands increase, the CPA versus average increases. So we might look at this and think, all right, clicks that cost above $29 here are 700% more expensive than average in terms of CPA, right? They represent about 10% of the cost for only 1.25% of the conversions. What if I cut out this 10% and reinvested it elsewhere? I reckon I could get more than 107 conversions a quarter. To do this, we're going to jump back into Account Manager, select those campaigns, and do a bulk action here called Update Bid Strategy. We're going to create a new portfolio bid strategy, right? We're going to use Maximize Conversions give it a name, give it a target CPA, and critically, give it a maximum CPC bid, right? So it was $29. Maybe we'll give it a little bit of breathing room and we won't go too aggressive. Maybe we'll call it $35, right? We don't want to bid above $35 because we want to suppress that band of most expensive clicks that we saw earlier. So this method of layering in a max CPC bid cap on a portfolio bid strategy on smart bidding has saved our clients hundreds of thousands of dollars in inefficient spend. And what we see in the market is that it's relatively underutilized. We did this very large data study here, again, with 100,000 Google Ads accounts, 600,000 campaigns. And what we found is that there's only about 16%, maybe call it 17%, of eligible campaigns that are being wrapped in a portfolio bid strategy. And even of this 16, 17%, 40% here aren't using that max CPC bid cap. So it really is a bit of an underutilized strategy that I believe is worth looking into. If you'd like to see just how high your click prices go, whether they're worth it or not, and making adjustments to reinvest that most expensive band, this is one of the many, many things the new Optio does. You can go to optio.com/early access, start a free trial, and go dig into your own accounts. Have fun.